Okay, good morning, everybody. My name is Anthony Carty. I'm the CEO of Eden Park Investment Management, which is part of the Clifton Asset Management group of companies. And I'm joined this morning by Phoebe Stone, who's a partner and head of sustainable investment at LGT Vestra. Morning, Phoebe.
Good morning.
So the purpose of this is really pleased to announce the fact that Eden Park is launching a range of sustainable model portfolios, and they're powered by LGT Vestra and Phoebe and her team. And so I want to sort of get under the bonnet a little bit with that and explain what that's all about. Won't be too long, should be just under 10 minutes. And Phoebe, if I can just start with probably a really basic question is, what does sustainable investment actually mean?
Sustainable investing is the allocation of capital to businesses that are focused on long-term sustainability, and even those that are pioneering for change. These are businesses that are involved in delivering, providing solutions to some of the biggest challenges that we face as a global community today. Problems like climate change, like resource depletion, like inaccessible access to healthcare and education. But on a more granular and practical level, what sustainable investing really is the incorporation of a series of non-financial factors into an investment process, into an investment decision. Traditionally, investors, professional investors, would look at a series of financial factors when making a decision as to whether to invest in a business. The financial factors could be things like stability of the business, looking at the balance sheet, looking at how much debt that company has, looking at revenue projections or even profit margins. Sustainable investing incorporates those factors, but looks to add on additional factors. Those factors are commonly known as ESG, which might be an acronym that you've maybe seen in the press or come across with your financial advisor previously, perhaps. ESG stands for environmental, social, and governance. And those are the defined non-financial factors, extra factors that a sustainable investor would incorporate into their decision. So just to dig into that a little bit more, from an environmental perspective, some of the metrics that might be used may be really understanding the impact the company has on the environment around them. So you could be looking at things like carbon footprint, carbon intensity, so the amount of CO2 emissions that company gives off, is it carbon neutral or even net carbon negative, as some companies are planning on being in the future? How much waste is produced from the manufacturing process of that business? How much water is used, how much paper is used, where the raw materials are sourced from? From a social perspective, there are also a number of factors. Factors like diversity of workforce, like how happy the employees are, the quality of the consumer journey, whether the company offers flexible working, the health and safety policies and track record of the health and safety of the business. Finally, from a governance perspective, there are a number of more factors, things like bribery, corruption, independence of the board, and remuneration policy of that board. What you're starting to see here is that it's possible to build up a more holistic picture of how that company is run by integrating these environmental, social, and governance factors into your decision. And that's why it's becoming increasingly popular, because you're actually able to capture ESG risks and identify ESG opportunities within that investment, because you've got, as I say, a more holistic, a more built up picture of what that company is doing and how it's run. So increasingly, this is a popular way to invest. Like I say, you can be investing to generate positive impact and really drive change through the investment community, but also start to pick up these additional factors that the ESG information gives you.
And Phoebe, with those additional factors and the, if you like, the purpose behind this style of investment, if I can put it that way, do you think though that there is the potential to sacrifice, if you like, good returns as a trade-off, if you like, for focusing on this area?
There is a bit of a perception that there must be some sort of trade-off, because if you're investing for a more sustainable future for generations now, but also generation in the future, there must be some compromise made somewhere. Actually, there's a huge amount of academic evidence to suggest the opposite. And actually, there's a lot of academic studies to demonstrate that if you incorporate these ESG factors into your investment making process. And you actually select the companies that score best. So those that are most highly sustainable, you're able to generate superior returns from an investment perspective. So higher investment creation levels and lower cost of capital for many of these businesses that are scoring highly from an ESG perspective. That's quite a big shift from the old school style ethical investing. And I think that's partially where this assumption has come from, whereby there needs to be a compromise on return. If we think about the old school style ethical investing, it's an exclusionary style. And in some cases, you're reducing an investment universe really very extremely, which means there has to be some sort of compromise on return. Investing sustainably, you don't have that exclusionary approach. It's more about selecting the positive companies and the companies that are really thinking and integrating proper long-term sustainability into their business model.
Okay, and I think what we'll do, Phoebe, is that's a great introduction. I think what we'll do is maybe record another one of these in a couple of weeks' time, just to maybe talk about some of the companies that appear in the portfolio, if you like, as evidence to support that. But I think that's a really good introduction. So thanks for taking the time this morning, and yeah, we'll speak again in a couple of weeks' time.
Pleasure.
Thanks.
Thank you.